Okay, I'm recording this video before the open on Thursday, the 2nd of December 2010, and I've had a couple of requests to do some longer term charts and some of the multi-market charts, so I'll just show you the charts that I'm looking at the moment. The first one is a daily chart of the Emini, and with yesterday's activity we've now got a cyclical low confirmed, which is actually a pullback in an uptrend signal. So we've had our break into an uptrend here, we've now come back to the cyclical low into a pullback, and we're kind of heading back on up, and the next signal that we'll get when we get a cyclical turn on this time frame will be an end of trend warning signal here. So I'm expecting over the next few days, week and a half or so, to get continued strength in kind of the risk assets, so the E-mini, the euro, copper, and so on. So I'm going to show you some of those charts and see what I'm seeing on the daily time frame. Going back to the Better X trend chart, I've showed you this over the last few weeks, and this is a volume-based trailing stop that just helps me kind of get the trend right. It works because we identify exhaustion volume, buying and selling volume at the beginning and end of trends, and you can see what you normally get at the beginning of the trend is an explosion of, in this case, of an uptrend of buying volume here, and that kind of signals a break into an uptrend. And then the end of an uptrend is signaled when we get explosive kind of buying volume. It's almost the mirror of that explosive volume that got us going in the first place, that's kind of taking profits at the end of the move. So we've had this to start this uptrend, and so we're kind of going to be looking for these types of explosive buying activity, which will be a signal for the professionals to be getting out of their long positions. But while that's happening, so we're looking for these bars, and I'm trailing a stop based on the identification of those bars. And I was saying, the last time I showed you this chart, that we hadn't had one of those until we had this red bar here on this chart about a week and a half ago. And so we had another one yesterday, and so we're trailing this stop up. So as we're heading towards that end of trend warning signal on the daily time frame using better sine wave, I'll be looking for those types of signals trailing the stop under those bars, and a break of that low will signal a change of trend. Anyway, so this last kind of pullback here, the trailing stop worked quite well at 73. We never kind of got broken. I think I'm looking for a close, daily close below that for the code to signal a change in trend. And then just looking at the better trend line, similar type of activity. The last few days we've kind of come into a congestion zone here with these white bars on better trend line, just showing that we're kind of waiting for a break either way. We had one a couple of weeks ago. We had a similar type pattern. We kind of broke to the upside and then kind of came back in and tested. That's not kind of unusual, coming back into the zone here. Next one, we're kind of trying to break into an uptrend again, so interesting to see how far this one kind of plays out. And then just to show you some of the multi-markets again on these kind of daily time frames using kind of the better indicators. So this is daily chart of the E-mini, continuous contract 24 hours here at ES rather than at ES.D that I was showing you kind of previously. And on this chart here you can see again a little bit blurred here, but this is the pullback level as signaled there. I'll blow this up. So there we go, kind of an interesting kind of combination here. I like this. This is my kind of trifecta. We've got a pullback level which shows a cyclical low being confirmed. We've got a professional blue down bar right here coming into this level. The last couple of down bars were professional blue bars here, signaling that they're starting to buy at this kind of 75, 80 type level down here. And now we kind of come in again with another down professional blue bar here, same kind of activity, buying those lows, and then we get bullish divergence on better momentum here. So the combination of a cyclical turn based on price alone, a professional blue bar based on average trade size, and then a bullish momentum signal based on buying and selling volume, is three kind of non-correlated indicators kind of coming together. That's my kind of trifecta that shows that that's a a valid kind of turning point. And so I'd be expecting to see this move kind of continue until we get that cyclical turn on the upside, which will signal an end of trend warning signal here. So that's the E-mini. And then looking at copper. Similar type signal here on copper. You can see kind of coming into these lows, these professional blue bars kind of buying into these lows at 360, 370. Cyclical turning point, bullish divergence, very weak selling at this point here. And then we kind of over the last couple of days kind of exploded into an up move here. So we got kind of confirmation with copper, which as I've said has been kind of a confirming indicator, or a little bit of a leading indicator of the risk trade over the last several months. And then some of these turning points, I'm just going to show you the euro here. So some of the turning points you don't get kind of a perfect signal here, so this is kind of good case in point. This is the pullback signal on a daily time frame looking at the euro here. Coming into this move, yes, we had a professional kind of bar down here a few days prior to that cyclical turning point, and we had some kind of exhaustion selling at that point, but that wasn't enough to stop this downtrend move. So we kind of broke through this 34 level back into 29, and then over the last couple of days we've had extreme buying, extreme kind of pessimism in the euro, and that's all kind of professional buying at the lows, exhaustion selling down here, very extreme. I don't know if you remember the last video that I put up on the euros, that I was saying that I didn't think there'd been enough kind of exhaustion selling, and we've actually had that over the last couple of days. So now we've got the cyclical kind of energy is now to the upside. We've got professionals kind of come in here, and we've got exhaustion selling on the downside. So we'd expect a turning point here in the euro, kind of just confirming the risk trade is on. And you can see that in the reverse with looking at the dollar index. Here you can see with the dollar index we kind of shot past this cyclical turning point. Although everything was kind of coming together here, we had professionals, we had bearish divergence, we had a cyclical turning point, but there wasn't enough sellers at that point. We needed to come back into this turning point here. Moving up into this turning point, we've got a Rambo pattern here, potential reversal of amateur breakout. The professionals step in right after that. We've got exhaustion buying, and so I'd expect the dollar to start to weaken. And kind of move back into the euro and the riskier kind of currencies, or the risk-based currencies. And then you can start to see that as well on gold. So looking at gold is going to strengthen on a weaker US dollar. However, I'd caution with gold that we're coming up to a second cyclical turn after an end of trend warning signal here. You can see in this last move up above 1400 on gold, we had all these professional blue bars up at these highs. It was actually a flush signal showing that there was less and less buying going on, kind of flushing out the buyers at that 1400. And you can see coming into this next kind of cyclical high, cyclical turn on gold, the amount of buying is actually quite weak, and the amount of selling that got into this short move was pretty extreme here, this kind of down move here. And so that signaled that there's a lot of people kind of trying to get out of gold quickly there, and this move back up might signal that if it's very weak buying, that's kind of a potential medium-term type top in gold, and that would kind of coincide in a bottom in the dollar and a top in kind of the risk assets. And then when I look at crude, similar type pattern in crude. Crude is not being able to break through kind of this 90 level. Each time we come into these highs, we've had kind of professional selling here, then we kind of came back into 80 and we had professional buying here, and then back up at 88 we had professional selling here. Didn't have professional buying kind of coming in here, and we've kind of rallied off this cyclical turning point, but coming into this 88 type level, it's fairly weak in terms of buying, and we've had our exhaustion buying, we've had our flush signal at the highs here. So I'd be curious to see what happens with crude when we come into this cyclical turning point in the next few days. So with 30-year bonds here, you can see we've just formed a pullback and a downtrend, and we're not going to see an end of trend warning signal on the downside until we get another cyclical turn down here on the 30-year bond contract. So again, kind of the move into the risk assets, into equities, into the euro, the Brazilian real, the Aussie dollar, and so on, all of those moves, and then away from the US dollar, out of the US dollar and out of bonds. seems to be, kind of the move that we're going to see at the moment, and then we'll get a coinciding of the move in the bonds with kind of the peak in the equity market. So when we see an end of trend warning signal here on the bond market, that most likely will be around the same time we'll see that end of trend warning signal on the equities market, and so on. So these things are starting to turn together, and what I'm seeing is a move back into risk that'll last the next 10 days or so. So going back to this daily chart of the E-mini, this is for me the most important kind of signal that we've got. We've got this kind of confirmed on multiple markets here. We've got a significant turning point, and this last kind of move into an end of trend type pattern on the equities markets, the risk trade and so on, the Aussie dollar, the euro, the Brazilian real and so on. So they're going to be kind of maxing out over the next week or so, and so the question is what happens after then. Most likely after then we'll go through some kind of topping behavior until we get a second cyclical turn, and then a change in trend. But be interested to see how strong this move up from this cyclical low point is. So there we go. Hope your trading is going well.